Welcome to the About podcast. Here we explore your financial health in simple and easy to understand ways.
Well, welcome back, everybody, to the About podcast. Deep into our 40s of episodes, if you can believe it. My name is Jeremy Scott. I'm one of the hosts here, and of course, joined by my able companion, Roy Hookey. Roy, how you doing?
I am stupendous, as always.
Yeah.
I'm really excited about our guest today. We always like having guests on our podcast.
Yeah. The guest episodes are really top quality.
I like talking to you, but
Yeah. Well, you know good people. And you and I are not experts in everything. I'm an expert in almost nothing as far as what we talk about here. You got me on those. But there's things that we don't know. So we get to bring in some wonderful folks in sometimes. And today we are joined by Adna Romero, a banking guru and expert who has had a career in baking that has spanned quite a few places and quite a few jobs. So Adna, thanks for joining us.
I want to clarify, it's Adna.
Adna.
Yeah, Adna.
Crazy A.
And that's short for Adna Shell.
Yes.
But very unique name.
Oh, wow.
But very pretty.
Okay.
But she goes by Adna. I've known her as Adna my whole life. But I know her. So.
It's much easier.
Okay.
Yes.
Okay. There's a family story behind that name.
Yes.
I have no doubt. That tends to be the interesting ones. But, well, Adna, we are excited to have you.
Well, thank you. I'm glad to be here. It'll be fun to share.
Yeah.
So I invited Adna on to talk about the world of kind of banking. And the reason is because she has a pretty fun story that kind of has a career arc within the banking world.
Yeah.
From personal banker to bank manager.
Yep.
To commercial lender.
Yep.
Were you personal lending as well for a while?
I did. Yep.
So it's kind of like has a very wide scope on the banking world.
Nice.
So we're going to kind of get some nuggets of information from her today.
Yeah. And for us here, I mean, our specialty on this podcast is, financial health and well-being. And of course, I think, traditional banking is the one thing that almost everybody does. Right. I mean, not everybody has a financial advisor like Roy, even though they probably want one and need one. Not everybody, participates in a lot of the more, esoteric parts of the financial economy, but pretty much everybody's got a banking account.
Yep. You definitely do. You definitely need one. And, in some aspects, you maybe need more than one bank, depending on what you're doing and, business, personal. So I think the most important thing is having a good banker, whether you actually bank with them or just somebody who you trust, who you can go and talk to and gives you and points you in the right direction.
It's interesting. I talk to a lot of clients and they'll tell me, I ask about all their accounts.
Sure.
Right. And then I also ask about, how they're registered and if they have any kind of beneficiary on those accounts.
Absolutely.
Right. But the client will have, let's say have 2 or 3 banks.
Yeah.
And I'm always kind of like, why do we have so many banks? And it's so funny because a lot of the time it's just like, well, I lived here for a short period of time. And so I opened a bank there and I just never closed it. And I keep, a little bit of money in there. And then I moved here. So I needed another bank. And anyway, so there's this kind of, accumulation of banks for some reason that people kind of collect. It's kind of funny.
Well, I took out a car loan. That happened to me.
Yes.
I took out a car loan and the best deal was through a credit union actually. And that's fine. But now they really try to sell you and like, well, you really want a checking account with us too and all that kind of stuff. So, I mean, it's
or you'll save money if you have a savings account or, you know what I mean? All that stuff adds up, right? So, Adna, let's start with setting the table. I always like to let our guests know why you're the expert that you are. Mm-hmm. So you have a fun story. Let's start with how you got into banking.
I guess I could say I'm a true unexpected banker, or, not necessarily everybody thinks they're going to become a banker. Like when you go to school, you're doing financial, going for finance. So definitely an accidental banker. It was not my direction. And the funny story is that I had been going to school. I was pre-med. So I have a degree in biology and a minor in chemistry. I was going pre-med. And that was my direction. And I actually got accepted into CU School of Medicine when we found out we were going to have twins.
This is actually news to me. I did not know this.
Yeah.
Oh, wow.
So we were expecting twins. And I think if we had had one child, maybe I would have tried med school. But with 2, I was just like, I don't think I can do this. So as a family, we decided that the kids were more important than my school. So I was working and one of my regulars came in, and he worked for a bank, and he used to always come in and sit in my bar, and he had a position available, and he's like, you need to come work for me. He's like, you need to apply. And I'm like, never even thought about it, right? Never thought about going into banking. So I applied. Obviously, the job that I had, crazy hours. And so banking had your more banker hours, right?
There's a reason they call it banker.
Except for I started in an in-store, which was 7 days a week until 7:00. So I guess a little bit better hours. But anyways, so that's how I fell into it. Started on the retail side. So definitely the guru of it, just the fact that I've done so many different facets, so many different areas of it. And then I've stuck with it. It's been a fantastic career. I've moved a couple banks, but it's one of those ones I think in the industry where, sometimes you have to leave one bank to go to another bank to get a promotion or to do something different. So, and most recently I've been doing commercial lending, but still have the background of all of the retail, because I did so much of that, and the personal banking, and stuff. So, but it's been a fun career.
So you went into retail banking, which is like the bank that's in like Walmart or King Soopers or something like that.
And an in-store is actually where I started.
In-store, that's what you called it.
Yep.
Okay.
Yeah, I was curious.
Yep.
What that was.
In-store.
Yep. So in-store. So a lot of the larger banks have different kind of different levels. They've seemed to have consolidated them over the years, but they have different business lines. So the in-store was one business line. Then they have Metro, which is more of your big city. And then they had Community, which was the smaller banks that were out on the outlying areas. So they kind of had different business lines. And over the years, a lot of the banks have consolidated those down, and they don't have as many on the retail side of things. And then there's always commercial is usually a different business line, and all those different pieces.
It's interesting on the other side of the COVID experience, how much banks have cut back on locations.
Right.
And size.
Yeah.
Even if a new bank is being built, they're much smaller now.
Well, and I'm curious, so when did you start in the retail side?
I started in retail banking in probably 2000.
Okay, so you were there during the whole when the online banking
Yep.
and the apps. See, I was gonna blame the apps, like in the apps and the ATMs and
Well, that's a
everything.
big
There's
part
a
of
lot
that,
of-
right?
That's
Yes.
So the
I
mean,
technology was accelerated so much that
Yep.
even
So much
pre-COVID, I rarely went inside a bank.
Yeah, you didn't. If you didn't have to, why would you, right?
Yeah, because you could do so much to the ATMs now,
Yep.
and you could do so much to the apps and the online and everything. So
you can even have money like mailed to you now.
Yeah.
what?
Yeah, you can.
Oh.
So if you go overseas and you want to get a currency,
Oh.
that's from a different country, you can order it and they just mail it to you.
Yep.
Oh wow.
Like you don't even have to go to the bank.
Nope.
I thought we weren't supposed to mail money. That's the one thing like my grandma taught me. It's like never mail cash.
Well, it could always get stolen. So
It can. And even before they mailed it to your house, when banks would order foreign currency for you, it got FedExed to the branch.
Oh, okay.
And then you had to go pick it up because the banks don't really, there was very, very few banks that actually had, and I don't know if there's anybody anymore that had foreign currency in them.
Yeah. Well, even that's going to be less and less because, honestly, my Visa card works pretty much everywhere.
it does.
Yep.
It really is for tipping.
Oh, yeah.
When you go overseas and you need a tip here and there. And
Yeah.
like in Africa, it's a very much a tipping culture. So you need to have that money. So,
Yeah.
you just request it.
Yep.
They send it to you. And not all banks do that, by the way, but a lot of them do.
Yeah. There's,
Yeah.
Which is actually one of the reasons I have one of my banks that I keep is because they're very convenient for that kind of a thing.
Oh, okay.
They're not even around here.
Nice.
right.
Yeah, it's kind of funny.
Well, and you don't think about how lousy we are with banks and banking and all that until you go to a country like some places in Africa where they're not as well banked as we are. And a lot more of the economy is in cash and a lot more of it's informal.
Yes. It
And
is.
you're just like, oh.
And you walk around, like I was in a different country, and you see a lot of the really nice buildings. They're actually banks in other countries too.
Yeah.
It's just not as readily available to people to be able to lend and have the commerce that we have here. And we kind of take it for granted, right? Because it's so easily accessible. Even you go to college for the first time and they're throwing a credit card at you, right? Well,
Oh my
that's not
gosh.
the way it is other places.
Yeah. I got a free T-shirt with my
Right?
NB&A business. My first credit
That
card.
T-shirt cost you a lot.
Oh, so much money. Yeah,
Exactly.
that's you get to learn about the dark side of compound interest with that one. So.
So you went to the retail in store,
Yep.
and you were just a banker, teller.
Assistant manager.
Oh, you were assistant
Yeah,
manager.
I started but in the in-store world, you're a banker too. So you're
Okay,
not.
so you're kinda doing both
you're
jobs.
kind of. They consider them universal bankers because you do some of everything. But yeah, so I
And
started.
then you got, you had twins coming.
Yep.
You got benefits.
Yes.
So that's probably a big part of that too,
Yep.
right?
Yep.
Okay.
So that's very helpful.
So why don't you actually, if you wouldn't mind, let's define the term banker. When you say
Okay.
you're a banker, what is
So-
that? Because I would think you're working at a bank. You are a banker, But
Right.
it's probably a little more nuanced. Than that.
Yeah. Well, you have your tellers, which are kind of your front line, who are going to take your deposits, do your withdrawals.
Okay.
And when you say universal banker, they do that as well as the products and the services. So other places a banker might be looked at as the person who you would go and open a checking account with.
Okay.
Maybe you would go get your auto loan, or you would get a credit card. They're going to do all the kind of on the consumer side, all of those pieces, your checking account, your savings accounts, small loans, car loans, home equity lines of credit, all of those types of things are what a banker is going to do.
Okay. Gotcha.
And then when you go to a commercial lender, the commercial lender is going to do anything, and it depends on the bank. They're going to be doing all the business. So business lines of credit, business equipment, commercial buildings, anything on the business side of it. And just really the lending piece. The banker's still going to do like the checking account for the business. And your commercial lender is going to do any of the loans that you need.
And I think people understand that the lender, whether it's personal or business, makes money off that.
Right.
Do bankers make money off of getting you to open another account or do a HELOC or whatever? Other ancillary services might be available. How does that work in the banking world?
So it totally depends on the bank. Your larger banks, more, I guess you could say national banks, usually have some kind of sales incentive when they sell credit cards, checking accounts, because all of those things obviously help make the bank make money. And then most of your commercial lenders, they're just a flat, and they don't necessarily. Some banks have some incentives, but they don't really have like incentives for doing. The banker still has, or the lender still has goals. But then when you look at a mortgage officer, which would be doing a residential mortgage, so like your home, those almost always are 100% commission. So they work for a bank or they work for a mortgage company, but then they are paid only when they close a loan.
Oh, interesting.
So they don't, and there's very, very few, I think, banks that even do, and sometimes they do a partial, so they get a very, very small salary, and then commission. Some mortgage companies, they would get, they kind of get like a flat monthly stipend, and then they have to close loans, and then they kind of have to pay it back. So it's one of those crazy, confusing things. But so it just depends on the bank and what they're doing. There can be incentives for giving you another savings account, another checking account, or getting you another credit card, referring you to another partner within the bank. So maybe.
And in full disclosure for our listeners, because I think this is important for them to understand, I've snagged Adna at a very opportune time in her career because she's in between banks.
Yeah.
So
Yes.
when she's giving you this advice, she's not incentivized in any way
Right. Nope.
to tell you information. That's why I think it's really great to have her right now in this little tweener spot where you're at between the companies.
Yeah.
But the question I would have for you based off of that is there anything that someone who's picking a bank to work with that they should consider or watch out for? I mean, you've
sure.
seen the inner workings, right? And
Yeah.
you and I just talked about this the other day and how
Yep.
even in my world of finance and your world of finance, they're completely different worlds.
Absolutely.
I don't actually know how your world works in the intimate way, right?
Right.
And you don't know how mine works. So
Yep.
that's kind of why I'm asking that question.
Yeah, I mean, so just to go back on myself, obviously I've been banking a really long time. And so I think I made the comment about having a good banker, whether it's your commercial banker, whether it's your consumer banker, but having somebody who will give you the advice. And I think, Roy can attest to this. I'm the type of banker that if I don't feel that I have the right product for you or the right service, I'm going to refer you to where I think you're going to get a better deal.
Okay.
And she has done that, by the way.
Yeah. And it's, I think it builds a relationship and it builds trust in me, because I'm not all about just having you do a product with me. I want it to be the best thing for you. And I think you're going to come back and ask me questions. So it's having somebody who you want to talk to. So when you're looking at banks, it's hard. I mean, you from a consumer side, it's really where you're going to get the best rate, right? For like your car loan and stuff like that. So I would probably push you to a credit union or anybody else to a credit union, because smaller community banks, while they can do a car loan for you, that's not really what they're good at. And so their rates are a lot higher, where credit unions are really good at that. And then, of course, they'll sell you a checking account, and sometimes you can get a discount on the rate, but it's probably worth doing that. And so it's good to do that. If you're, doing most everything online and with your debit card and your credit card, then you probably want to look at a bank that has a really good, robust online option out there. I would say if you're somebody who travels a lot, you probably want a bigger bank, more of one of those national banks, because they're going to travel with you better. You're going to be able to get 24-hour customer service. If there's something wrong with your debit card or your credit card, you're going to actually be able to get somebody on the phone, even if it's on our new AI world that can probably help fix things, where if you have a smaller community bank, which I run into this, I had a client who came over with me and was in Florida, and there was the time change, had 24-hour call center, but there wasn't actually somebody there except for 8 to 5. So if you're not in Mountain Time, 8 to 5, and you're in Florida and you're stuck, there's not anybody to talk to. So I think it depends on your life. So, if you're going to pick a new bank, you need to go kind of interview them, right? You need to look at online, see how easy it is to do stuff online. And then if you're a business owner, I think it depends on, again, how robust you are. If you're not doing a lot of transactions, then, my small community bank is probably good. You're going to get a little bit more personal service. But if you're more robust and you're needing a lot of different products, ACH and wire transfer capability.
Well, one of the things I actually ran into recently was a client has a business. We wanted to connect their account, because I have a software program that can feed all that information into. Well, it's a smaller bank, and they don't have the capability to do that.
Right.
So now we have to manually enter all that information in. Whereas if they had a national bank, they all have that.
Treasury management, which lets it feed in. So you have to look at that. So again, it comes back to interviewing your bank. And when you talk about people having multiple banks, sometimes they need the big national bank for traveling and for the treasury management that they have, but then they might still need a smaller local bank for keeping some of their deposits, because they're going to get better rates, and their loans, because they're going to get a better deal on their loans. So you kind of have to be all over the place. I know usually what I hear, like you talked about people having different accounts because they've moved. Well, I usually hear from the other side where they're trying to stay within FDIC. And so they've got their money plopped all different places. And that comes back to, if you had a banker and somebody you can sit down and talk with, they can help you structure so that you can increase your FDIC coverage within a bank without having to move to different banks. So again, coming back to
for our listeners that don't know,
yes,
FDIC is what?
FDIC is your insurance on your deposits in a bank, which when you hear just outright, it's usually $250,000
a person
per person. So there's ways that you can increase and get yourself $500,000, $750,000. But that's sitting down and talking with your banker at your bank to see how you can structure those things. So.
And unfortunately, things happen. I mean, you saw that with Silicon Valley Bank a couple of years ago and everything. That it's not common. I mean, banks are very, very stable today compared to what they were 50, 60, 100 years ago. And so it's not really probably a big concern a lot of people have, but it's not not a concern if you've got that kind of money.
Right?
I was caught up in that. I don't know if I ever told you this.
No, the Silicon Valley.
So my payroll company, we don't bank with Silicon Valley, but our payroll company did. And our payroll went out of our bank account and into the Silicon Valley bank account for literally overnight before it goes out in payment to the employees. And we were on deposit that night.
Oh my gosh.
Happened. Yeah. So kudos to Silicon Valley. They were over communicative, and I should not Silicon Valley. The payroll company was over communicative, and they actually backed it with other monies that they had to push that payroll through.
Oh well, that's good.
So it was amazing. We work with Rippling. Just give them a shout out there because that was actually a wonderful service in a really, really uncertain time. We're like, did we just lose our payroll for the entire month?
Oh my gosh.
Right.
Yeah.
So those things do happen though, right?
They do. So that comes back to
and it's actually a really big, and just to hit on this one a little bit more, for businesses, this is actually a big problem because there's businesses that have more than $250,000 of payroll. So what do they do to protect that money? And the answer is they can't, relatively speaking, for short periods of time. There's ways you can mitigate it. Like for instance, people can have on deposit with me way more than $250,000, but we can put it into treasuries, right? Which is FDIC is the Federal Deposit Insurance Corporation, or a treasury. Now, what are they both backed by? The government, essentially, right? But are they going to back an insurance product first or a treasury first? Probably a treasury, and that's why they're sold individually and things like that. So that's how we help mitigate risk for people who have large sums of money on deposit, right? Because they can't just put it in a bank account, have it in cash, and have FDIC insurance because they go well above that. Payroll companies have this issue. It's not been solved. Congress needs to do something to help those people, but they haven't. So
because it's just large sums for short times.
Exactly.
Got
to meet payroll.
Yeah.
You know, you can't have your money tied up in something to be able to pay out a payroll.
Yeah. Well, that's the thing, and that's the thing. The reality is, things happen, right? Things happen in the economy. Things happen in the financial world, and it's interesting. You may say, "Oh, well, then I just want to go with a big national bank because clearly, for whatever reason, you're like." But then, Wells Fargo got themselves into some pretty decent trouble a few years ago by, opening products that people didn't ask for and all that because some of those incentives that they had in place for their employees went a little astray.
Bigger does not mean better.
No.
Right? Yeah. So it's all about the quality and the underlying fundamentals of whoever you're working with, right?
Right. And there's different regulations and everything I know too. But I mean, sometimes the smaller maybe state bank is the way to go if you're like in, especially if you're kind of in the community and invest in that community.
You can only do your best, do your due diligence, but you don't know everything. Nobody knew what was going to happen with Silicon Valley, right? Like, nobody like us would have access to any information that would help us say like, oh, don't go to Silicon Valley, right?
A lot of really, really smart people had a lot of money in that bank.
They did.
And you would think, oh my gosh, like if they didn't know, then what hope is there for the rest of us?
So good points though on the FDIC insurance, making sure you have a good banker to help you with that, mitigate the risk that you could potentially have. And there's different ways you can do that at the bank.
So what would you say? I mean, if somebody's, is like, well, I've got a bank account. I've got, I do, if they're like me, most of my stuff I do through the app or, through the ATM or whatever. When is it like, what are things that, going and talking to a flesh and blood person, talking to a banker at the bank, at whatever it is, what are those times you're like, no, you really want to, go to a human being,
I think it's when you have changes in your banking needs. So when you're looking at getting loans, those are probably the biggest one is when you're looking to get some kind of loan. I would say that it's always better to do it before you think you need it than when you need it. It usually takes a while to get things in place. There's approvals and all the different financial pieces that go through. And some things you can get pre-approvals for. Other things, like I would say, if you're going to go buy a new house, you can get a pre-approval. So you want to be going and looking at different banks to see what they offer. And you can get pre-approvals, but also know in that there's going to be credit pulls. So you might want to go investigate several different banks or loan, mortgage companies first. Then when you look at business, there's not really a pre-qualification for businesses. It's not like you can go get pre-qualified and then go look for your commercial building and buy it. You can, a little bit, but it's not the same as like when you buy a house. You definitely get a pre-qual, and they want you to come in with that pre-qualification letter. When you're doing a commercial building, there's not really that same piece. So, but if you're a life change, I guess, would be when you want to look at your banking options. I would say if everything is working good with what you have, then you're probably good to stay there. But if you're having any difficulties with in using your credit cards or using your debit card or being able to access things online, then that's a good time to maybe go look at other banks and see how they do those things to see about potentially changing. And then again, it comes back to like the car loan again is a great example of, wanting to have that checking account, and credit unions are probably one of the better places to get car loans because that's something they're really good at. And then you can look at their account and be like, well, maybe I want to start transitioning things over there. Right. It also depends like on, again, your lifestyle and what you have. I have a lot of my banking stuff where I have, I'm a robust banker, I guess, because I have myself, I have 3 kids, I have my mortgage, credit cards, online banking, and I actually have all of those at one bank. And so it makes it so much better to manage and easier to manage those things because my kids are all over the country. They were going to school. So, we had, different things going on. So I can manage everybody in one place. And then if I were to have a business, that particular bank, you can also, look at your business at the same time. So sometimes, but you can keep them separate so that they're not also, running over to each other, but being able to move back and forth. So again, it comes down to, how many different products do you have and how do you want to be able to manage them? So sometimes it's nice and banks refer to those as sticky products. How many sticky products can we get that customer? Because it makes it harder for you to move.
Oh, it's really annoying to move your checking account.
It is.
Especially these days where everything is autographed.
Especially once a client has a receiving Social Security.
Oh, for sure.
Yeah.
That's a really sticky account because it's just a pain.
Yeah. So we have, I have, my kids have checking accounts but we're all in the same bank because it's like open up the app and I need literally I need to give you $10 to buy some food right now. And I can done. And it's just instantaneous. And so that kind of stuff is really convenient.
Yeah.
And, I've told my son, he's off on his own now. I was like, well, you can go get your own bank if you want, but then it's going to make it a lot harder for me to give you money. And he's like, no, Dad, it's fine.
Right. So. Yeah. So you can get stuck with all of, doing all of your main banking somewhere, but then you might have some one-offs where, you need to go to another bank to get that other product. And of course, they're going to want you to bring over your checking account because those are the sticky products. So they're going to keep you, they're going to keep you there. An auto loan is a short, usually hopefully a 5-year endeavor. So, you're done with a car loan, you should be done with them and you're going back to your regular bank. So it just depends. And I think that comes back to where the more we go with online banking and all of those types of things, we don't have that personal touch. So then you don't have somebody who's convincing you to bring more of your items over. So that will be an interesting thing. And I was actually part of a test leadership group through ICBC, which is it's a community banking organization, nonprofit out of Denver. And our whole thing was we had to do a research on AI and banking and how it's going to affect the banking world because there's some stuff that they can do, but to be able to have that personal touch and to be able to, a good banker is going to go through and sit down and go, oh, I see you've got all of these things with us, but I see you have a brand new car. How come your car loan's not with us? Right. So there's those things that I think AI can't touch where a good banker is still going to be able to notice that, and they should be noticing that. And then they're going to try to convince you to hopefully refinance. And so then that helps the bank grow. So
I can tell you it clearly drives my bank nuts that I don't have a credit card with them. I've got multiple checking accounts. I got a business account, a savings account, and all that kind of stuff, but I don't happen to have a credit card with them. And given how much they try to solicit me to get a credit card, obviously it drives them a bit crazy. So
probably
every time I open my online banking, every time I get a mail from them, anything like that, it's like, do you want a credit card? And it's like they really want you to all be in one place.
They do.
Which makes sense.
I kind of look at banking like insurance nowadays, though. It's like bundling, right?
Yeah.
You have your car, you have your home, right? You have umbrella policy, whatever. You get a better price, right? So go to the bank, same concept, relatively speaking, depending on their services. Now, a question I have for you, Adna, is if you're not happy with your bank, do you have any leverage if you're like, hey, I'm having this problem with you guys, you're not solving it, I'm going to move my stuff. Does that help to tell them? Is there anything they can even do? Or is it just, hey, if you're that unhappy, you just leave in the dark of night kind of thing and don't tell them?
Yeah, I think it comes back to the bank. And what bank you're at. Some are going to have the ability to maybe work with you some, and some probably don't. So it probably comes back to the size of your bank. I would say your banker that's just opening accounts is probably not going to be able to help you that much. Your teller is definitely not going to be able to help you with something like that. So you're going to have to look for, probably a manager, and then really sit down and let them know what your issues are. The hard part with online stuff and AI and doing everything on an app is they can't really help you. And if you get frustrated with things, there's not anything you can do. And then, bigger banks, you're calling in, and every single time you call in about that problem, you get somebody different. Mm-hmm. And so you have to re-explain your story and hope that they can pass it along somewhere. So that's where coming and walking into the bank is where you're going to want to go again and find, a manager and sit down and talk to them and see if they can, explain to them what your problems are, and hopefully they will take ownership and really, so I would say if you can't walk in somewhere and sit down and talk to a manager and they don't take ownership and try to solve your problem, then you should look at moving to another bank.
So lending is a big deal out there nowadays. So you've already kind of mentioned car loans. You typically can check out a credit union just because they kind of have a little bit better, market there, let's say, right? Yep. What about if you have monies on deposit with the bank or run a business account through a bank, are you going to get any more favorable rates for a mortgage or a car loan or a personal loan or a HELOC, home equity line of credit, by having deposit on at that bank, or does it really matter and they should just shop it?
It's going to depend. So I'd say your home equity lines of credit, you're going to want to shop that. Those ones, you really need to shop it. And I would say deposits aren't necessarily really going to help you. They're pretty much flat across the board they're a prime-based product. Really, you want to shop it because it'll be how long they're out there, how long of basically like a term. How much you can borrow is going to depend on the bank. Rate isn't going to depend a whole lot. Car loans, which we already talked about, you're going to go to your credit unions. A lot of your personal loans, again, deposits probably aren't going to make a whole lot of difference. They could have a little bit of specials. Those are kind of flat across the board, going to be a prime-based. Credit cards, those ones, I'm a credit card junkie. I use them like a madman.
But you pay them off every month.
Pay them off every month, but
you got to be clear on that every
right?
month.
Yes, pay it off every month. But look at those ones you need to shop around because it depends on what you do. Like I'm a travel queen. We travel so much, so a travel card is super important to me because of the benefits that I get for travel. So you have to look at what if you don't travel, then you want to look at a cashback credit card. Those aren't going to matter what bank you're going to be at. Those are going to be completely, you're going to look at what their annual fees are and what you're going to get for using it.
It matters if it's associated with Costco. And not surprising, Roy, at all.
Yeah.
My primary credit card is the one that's tied to my Costco account.
Sure.
Because I want my Costco cash.
Right. So,
so when they switched a few years ago, I switched. So.
Yep. So, you have to look at where, other Sam's Club, all of those ones, they have one. So you have to look at what are your rewards. If you're spending a lot, then it makes a difference. Then if we're going to look at your commercial loans, that's where you really are probably going to start seeing when you're shopping a bank, having deposits, having more of a relationship with the bank is going to affect your rate. It is, of course, going to depend on the bank. A bigger national bank, probably not so much, but definitely your local commercial banks, they're looking for deposits. So they want deposits with their loans. They're going to incentivize you on the rates. And with a smaller local bank, the other nice thing to know is as your deposits come in, know that what they're lending out is going to be in your community. So the money, they don't lend really outside their footprint. So if they're a Colorado bank, all the deposits that they bring in, all the money they're lending out is going to local businesses.
Yeah.
Where it's always nice to know that they're supporting that.
Exactly. Where when you go to a bigger, institution, they're across the country. So they're, as much as they're bringing in deposits, their loans are also across the country. So it depends on, so some of those things do. So that I think on the business side, there's definitely more benefit that you're going to get by, doing a loan with them on your rate and your terms and all those things.
So big question that I see a lot from clients, or actually I probably ask them more than anything. So I do a question for all my clients about their emergency reserves, right? Which is largely in their savings. And if they tell me it's a kind of a big number, I'm like, well, what are we doing? What are we doing and why are we doing that? If it's in their savings account and they're just getting, 0.04%
Yep.
on their savings rate, the bank is basically using their money and lending it out at, a higher number, of course, right? So they're making a spread there.
Yep.
So what could people do if they want to keep their life simple and keep it in the bank, or they don't have someone like me to work with where they can move it and get, money market rates or your treasury bills and things like that? What should they do with their bank, their local bank, to try and get better rate on their savings? Are there things they can do?
Really, with the savings, look at what your balances are. Most banks, even the small ones, have tiered, depending on if you're on a basic savings or if you move into a money market, depending on what your balance are, they're going to be tiered. You're going to get a better rate. Break it up. So you have a little bit in a savings account, a little bit in a money market, maybe some in a CD, different, again, you have to shop it for your CD rates. And there's a lot of people who do that move around.
You got to shop money markets too.
Yeah, definitely.
Because
so
each bank is honestly different on how they're willing to take a spread.
Right.
Because, you make money off of saving deposits for the bank.
Yep.
You make money off of spread on CDs. You make money off of spread on money markets.
Right.
And you got to shop it.
Yep. And it changes.
But here's a real, and this is a real thing, right? We had rates near zero a few years ago. So if you're shopping a rate for 0.07, is it really worth your time? Right. It's not. At a certain point, you just say, good enough. It's not worth the effort of the gas to drive to the bank to talk to somebody to actually move that money, because you're not even going to make that much that you just spent in fuel. So we have to be commonsensical too, right? Yep. It's not just about getting the best rate. It's like, what's the effort behind getting that rate?
Absolutely. And you have to realize we want rates to come back down. And there was another reduction to prime, and hopefully there'll be some more, which is that teeter-totter, right? So hopefully it doesn't necessarily completely go into our mortgage rates right away because they're not tied together, but it will eventually. But the more our rates come down, that means our savings accounts, CDs, and all the rest of those rates are going to be coming down too. So in Roy's point, as we watch rates come down, it isn't necessarily worth
I was just going to say,
moving around.
We don't want rates to come down, but lenders want rates to come down so they can lend more, because people are kind of sitting on their hands right now.
Right? Yeah, it's a catch-22, right?
Yeah,
so
if you have your short-term, the short-term yield curve is what was being affected, right? By the Fed just reduced rates just yesterday. At
the time of recording.
Yep. They just reduced rates another 0.25%. 25 basis points, and that will not affect the 30-year mortgage.
No.
Right? So there's a yield curve. Now, it will have a impact over time as money trickles through the yield curve from short to long term. And you'll see probably those come down, but it's not, immediately going to come down. But we're getting less on money market, less on savings.
Yep.
Potentially lower rates more quickly on shorter term debt, though.
Right.
So yes.
So what are some things that I think I was kind of curious for folks listening at home that maybe are kind of your just typical average customer of a banking or an institution? What are some things that like bankers might do or be able to help with that people may not know, or wouldn't necessarily think, oh, I should talk to my banker about that? You said like life changes.
Yeah,
is a big one.
Yeah, I think whenever you have life changes, it's the same as relooking at your will or your life insurance, is you should probably be looking at your banking, like what products do you have? So, and I think when you were talking about shopping banks, it comes back to, walking in, and is the banker that you sit down in front of, are they an order taker? Are they just like whatever you ask them for? They're, I walk in and say, I need a checking account. And they're like, okay, checking account. Or are you walking in and sitting down with them and they actually like ask you questions like, what do you like about the bank you have now? And, what are your future plans? Do you have kids that are going to be going to college soon? So if they ask those questions, then they're digging in a little bit deeper. And crazily enough, really they're looking for sales opportunities, right? Sure. To sell you more products. But it also means that hopefully they have a little bit more knowledge about banking. They have a little bit more knowledge about the bank that they're at, and they're going to know what products and services they can offer you if they're asking a few more questions versus just taking your order when you walk in the door. So I would say when you're shopping a bank, if they're just taking your order, that might not be the bank that you need. You need to be able to, kind of like Roy said, financial. I call myself kind of a financial doctor. Instead of getting into medicine, I got into banking and the other side of finance, not the investment side, but the day-to-day stuff. Mm-hmm. So being able to...
Almost like you're a financial advisor.
Almost, but kind of different.
Shout out to the financial advisor episode of what is a financial advisor.
Yeah.
Because realistically, what you do to a point is financial advisor-esque.
Yeah, it's
in a different way.
It's your day-to-day taking care of your money, of getting your direct deposit for your payroll, bringing in, moving your money for your business because you're taking in cash or credit card transactions. So, having somebody who can look at what you're doing, and every single person is different. And I think maybe that's part of the reason why I stayed in banking so long is it's the fun of working with a client and growing with them. Over the years, my clients have followed me, and they've started out with, they just started a business, and, pretty soon, they're able to get a loan, and then pretty soon they're able to buy a building. And so you can stick with them, or they come to you so they can get their kid their first credit card, or they're, going off to college and getting them their first car. So you get to kind of move with them as their financial needs change and help them get all the different products that they need. And like I said before, depending on where I'm at, I might not have the product that they need there, but I have so many contacts and partners and other people in the industry that, I can be like, I'm just not the right person for this. You need to go over to XYZ and they can help you out. So coming back to that, having that relationship, and hopefully they're the type of person that if they don't have the right product, they're going to steer you to the right place, which will make you go back to them and ask them about what you need to do next.
Well, and I think that the experience side of it, that's the differentiator too between, for the everyday stuff, yes, I love my app and I love being able to transfer those things. But when things get weird, that's the thing, just talking to somebody who has experience within the world of banking and how all this stuff works in a way that, most of us don't have, especially when those life events happen. I was just, as you were talking, I was thinking, my wife passed unexpectedly a couple of years ago, and I was like, I had no idea what to do, and I got things in her name, and I'm like, well, what do I, like checks and stuff, and so I literally went down to my bank, and I'm like, what do I do now? And they're like, well, have you done the probate thing yet? And I'm like, I don't know what you're talking about. And she actually walked me, she's like, okay, you need to go down to the courthouse, and you're going to talk to this person, and she's going to, and then you're going to get this piece of paper, then you're going to bring it back to me, and then we're going to open up an estate account. And I'm like, okay. And it worked and I'm sure she's done it because she's done it for other people and she's seen it. And so she could just be like, look, and it's not anything I'm sure she was trained to do or anything like that, but she's just seen it. And she knows what people have to go through, and she knows what they need to do their work. And over the time has learned how that happens.
And the app's not going to help you with that.
The app was not going to help me with that. And the AI chat on the thing was not going to be like,
Or look you in the eye and be like, this guy needs help right now.
And then, and I was in there, a lot for the first 2 times, and she'd come in and she'd ask me questions, and it's like, how are you doing today? And, all that kind of stuff. How are your kids doing? And then how can I help you? And all that kind of stuff. So yeah, it was like, oh, okay. Like this is why these places are good.
Yep.
Exactly. So sometimes that's what keeps you, along with the sticky products, is if you have somebody who you can walk in and they know you and they can help you out with things like that.
In that same vein, Adna, the one thing I'd help a lot of people with is their estate planning, right? And I think we mentioned a little bit, but looking at how accounts or titles is obviously important, but then do they put beneficiary designations on them or not? For the banking world, it's largely called a payable on death.
Yep.
For my world, it's a transfer on death because I'm transferring an actual asset because it could be stock or bonds or whatever. But for the banking world, it's largely just cash, right? Even if it's a CD, it will just mature and they'll still pay out the cash. So it's a transfer of an asset, or excuse me, it's a payable cash asset, if that makes sense. But Adna, what should clients think about if they're banking with somebody? Like, is it typical for them to even get asked that question by the bank? Or is it something that they have to request to put on their accounts?
Yep, great question. So they would definitely, again, if you have a really experienced banker, maybe, but I would say it's definitely not something that's ever asked. It's definitely something you would have to bring up. So obviously, I think again, you have to look at where you are in life. So you can have a power of attorney on an account, or you can have a pay upon death. I would say, our older generation, you might, whoever you choose as maybe your executor or personal rep, add them as a joint owner on your accounts, just because it's going to be much easier to deal with and take care of those accounts.
I will actually stop you there and say, don't do that.
Yeah.
The reason I'm saying that is actually because I've seen this happen, and you probably haven't. But if Jeremy and I were joint owners, let's say that you're going to make the decisions, but you get sued,
Yeah.
and you're on my account as a joint owner, that's a problem because now that could pull that account into the lawsuit.
Oh.
So I actually see this a lot where people will add their kids onto their accounts, and I always tell them, don't add your kids onto your account for the purpose of if something liability-wise happens, you're pulling people into each other's lives at that point. But you can put the ability for signing, they can have signing privileges and things like that without being an owner on the account.
Oh, okay.
So
that's something they should really consider.
Okay. So that's interesting because I'm having this conversation with my mom right now. Who's, getting up there.
Yeah,
And just
exactly, right?
Yep.
So you could do power of attorney, which
Power of attorney is absolutely another one that they can use. But
that's
every institution's different, though. Power of
Right.
attorneys are they're problematic at times, right?
they can be. And if the person passes, then obviously the power of attorney is no good anymore.
Right.
Yep. So then it goes to the beneficiary designation if you have one at
If
that
you
point.
have one. And on your typical checking accounts, they don't automatically have that. So usually more on CDs and stuff like that, you would put a pay upon death, which is
And the
kind of like
reason
you said.
I'm bringing this up, and our listeners need to know this because I think it's a big nugget, is that in Colorado, you can put a beneficiary designation on almost anything, right? So the reason that's important is you have your retirement accounts, you have your home, you have your vehicles. Those can all be beneficiary designated. Now, why is that important? You were told to open up an estate account because your wife had to go through the probate process, right? We can avoid probate by using a beneficiary designation. It supersedes a will, and it doesn't have to go through probate. So it makes things simpler. Now, the reason that banking dollars are so important is because in Colorado, and don't quote me on this, everybody, but it's roughly $85,000. If you're below that in assets to be probated, then you can do a small estate probate, which is just a piece of paper and a file, and you're done.
Yeah, that's
pretty
what I
much,
did.
right?
Yeah, it was pretty basic.
So for people who hold too much in their accounts, though, at
right.
the bank, right? You could force a probate just because you didn't put a POD, payable on death, on the account.
Oh, okay.
So for our listeners, seriously take a look at putting a payable on death, right? So if it's a joint account between a husband and wife, nothing needs to be done because it's jointly owned. If one passes away, the other one gets it.
Right.
But if you have, let's say, 2 children together, you could add them as contingent, or actually they would be the first line, on a joint account.
Okay.
So they could get that if something happened, you guys were traveling together and something happened to both of you and you passed away, your children can get those assets without it going through probate. So that's something.
Check with Roy first.
Right.
too.
I do a lot of this stuff, but it's not really talked about in the banking world. That's why I can answer that question, because clients just need to know that it's not, but it's things that they can do and their bank can provide that.
And it's not normal, so sometimes it's difficult. So it's finding that person who knows about their bank. It's not necessarily set up for like your checking account. So they are a little bit trickier and harder to put into place.
Nice. Okay. Well, this has been great. As
Lots of
always,
nuggets.
lots of good nuggets, and I always learn a ton.
Well, it's kind of nice to know a little bit about the inner workings and things to consider. I think we got some really good stuff here, with credit unions versus big banks, small banks, regional banks. You travel, you don't travel. That's awesome. thank you, Adna.
Yeah, my pleasure.
Yeah. Well, and I think sometimes it's one of those things that is probably on automatic pilot for a lot of people,
Absolutely.
right? Like they get set up and then they don't really think about it, and they don't realize that there's different banks have different structures and can offer different things, depending on what it is. And so if you need the big national, great. If you want more of a community focus, if you're thinking about going down the small business route someday, then setting up a relationship with a local bank or more local bank that may be your partner down the road for a business you might want to do in the future or whatever it is. I mean, it's one of those things that bears taking a look at and saying, wait a minute, is my current solution actually meeting all of my needs?
Absolutely.
Because there's some people they don't like. I like a super high tech bank. I want the app. I want the fancy ATMs. I want all that stuff. Some other people don't care.
Exactly.
Right? I mean, they want branch locations where they want to be so they can go in and talk to a human being. So it's just, is this actually meeting your needs? Because there might be something out there that does, and it might be a little bit of a headache to move, but it might be worthwhile.
Exactly. And it's just depending on what you need.
Yeah.
Right?
Yeah.
Talk to experts like Adna and Roy, and Jeremy probably has some information that you can share at this point in his life.
Well, I'm learning. I'm a work in progress around here. So, well, Adna, I want to thank you for joining us.
Yes, my pleasure. It's been fun.
Awesome. Thank you, Adna. I really appreciate it.
Yes, we do. You do. Well, thank you, Roy, and thank you, everybody, for watching or listening, however it is you are consuming this amazing content we put out. We thank you for that. Please, as always, like, subscribe, share with your friend, especially if you got somebody maybe who's starting off in life and just thinking about getting into the banking world because they're in college, first job, that kind of thing. Maybe share this episode with them and let them know what's going on. All right. Well, thank you both. Have a great day.
CWA is a Securities and Exchange Registered Investment Advisor. No content contained herein should be construed as an offer for investment advice or an offer for the purchase or sale of any security, insurance, or other investment product. Investments involve the risk of low loss, including loss of principal. Please consult with a qualified financial, tax, or legal professional before implementing any strategy presented here. Data presented here are obtained from believed reliable sources but cannot be guaranteed as to completeness or accuracy.